The latest estimates of where the U.S. national debt will be by the year 2036, which were recently released by the Congressional Budget Office and do not factor in higher military spending of $1.5 trillion per year yet, could send total U.S. national debt to anywhere from $70 to $73 trillion by 2036. And that is money that, number one, we know doesn't exist today. It's money that we know others do not have to lend the United States. And that's money that I expect will be created out of thin air and directly collide with the U.S. Social Security crisis I have been regularly warning you all about, which, according to new data from the Congressional Budget Office as well, and published just last week, will likely run out of money by 2032 instead of 2033, triggering, as I've mentioned in past videos, an approximate 25% cut in payments made to Social Security recipients that, by the way, I don't expect to be made, as I really expect the money for that Social Security on top of the money for this massive military spending spree to be printed up to fill the gaps, suggesting we may not see this bull market for metals take a significant pause or pullback until we get clear of that event. So keep this in mind and have a long-term focus on gold and silver. And don't allow yourselves to get shaken out by manufactured short-term volatility, because as I've said in recent videos, gold will make new highs probably as soon as May, if not sooner, and silver will do the same by September or October, if not sooner, depending on how long we consolidate within the current ranges that I showed you earlier on in this video. So keep that in mind, because I still expect to hit the targets on the right side of the screen, which I expect us to begin accelerating towards only after the US dollar, which was strongly rejected at the 100 level this week, breaks support around 96 on the dollar index, a level that is progressively falling, by the way, as less buyers step in to buy the dips in the US dollar. And I would expect that to happen only after this war with Iran starts to get priced out of the market, which, as a warning, may take us back to the lower parts of the gold and silver trading ranges that I shared earlier on in the video, but only temporary, as the problem I presented in this video is a major reason why I encourage everyone to hold on to their gold and silver, because it signals to us not only is more currency debasement on the way, but the sheer level of it is going to be much higher than what we saw even during the COVID times.
Well, I'm very bullish on silver. In my opinion, the bull market is not over in gold and silver. In fact, Daniela, I got to show you a chart real quick. This chart shows, here's the duration of the bull markets in modern history, and there's ours at the bottom. Just today, now, as you and I talk, the gold bull market is officially 2 years old by the way I measure it. And it's the same way I measure these other bull markets. The average bull market in modern history is 4.5 years. You can see we're only at 2 years. So we've got a ways to go yet, in my opinion. And that means silver as well is going to continue to perform well. I do expect the gold-silver ratio to fall. I don't know about these real high triple-digit numbers by summer. But you know what, Daniela, it doesn't matter to me. It doesn't matter to me if it happens, if it doesn't happen, if it happens in a month, or if it happens in, 3 years, because I'm sufficiently long both silver and silver equities to take advantage of it when it comes. Our job isn't to try to predict. It's the other P word. It's to prepare for it.
Exactly.
Make sure you own enough gold and silver. Make sure you have exposure to equities if you really want to go on the offensive and grow your portfolio in a big way. That's our job, is to prepare, not necessarily predict for it. It's fun to think about. It's fun to talk about. But for me, it's more about being prepared for what may come, whether that's a big jump or a big correction. I have a lot of cash, and I encourage people to have a lot of cash in this environment, because that's partially your defense, but it's partially it gives you the ability to take advantage of any sell-off that may come.
Silver has a much more serious supply deficit Industrial demand is tremendous. Every single missile being fired there has silver in it. Every single jet, every single drone, every warship, every submarine would not be flying or swimming about without silver in it. And if you look at 1979, silver outperformed gold 3-1. Something to think about. And again, if you look at our silver stress here, Comex is running out of silver, which basically means, in theory, silver should go up a lot.
I sold my silver, and the social media response was overwhelmingly negative, which let me know I was doing the right thing. My purpose for buying the silver, as I explained to you then, was when I bought it was unloved. Or pardon me, totally unloved. It was hated, and I figured when the hate dissipated, the silver price would go up. That happened. It was in my speculative account, so I sold it. And as I say, for me, it was a good decision.
Well, and here's what I didn't think to ask at the time. So 80% sold, you still have 20%. So what is the plan for that?
I don't know. To be honest with you, I sold that which was easy to sell. That was in the Sprott Physical Silver Trust. The remaining 20% is actually physical silver.
Okay.
So to sell it, I would have to go through some aggravation. And the silver market is so volatile right now that the dealers are bidding a 7% discount to spot. And I'm in no particular hurry. I sold the vast majority of my silver, and I sold it for what I think is a very handsome price. So I'm not disinclined to hang on to the balance, particularly because it would represent some effort on my behalf to sell it.